What's up, everyone? It's time to talk about something shinier than my personality, hard to do, and that is gold. Gold bars and coins. Now, while traditional assets like stocks and bonds can make you feel like a high roller, we all know that they can crash harder than my grandma's attempt at rollerblading. So today we're diving into why you should consider adding gold to your portfolio. Buckle up, because we're about to make your investment strategy a whole lot stronger. So first up, let's talk about stability. Gold has been around longer than grandma's secret cookie recipe. Through economic ups and downs, gold has maintained its value. Unlike those tech stocks that can plummet faster than a lead balloon, gold provides a steady, reliable return over time. Who remembers the 2008 financial crisis? While your stocks were free-falling like Tom Petty, gold was there, standing like a stubborn mule. It's really been like the superhero of investments over time. Always ready to save the day when everything else is going down the drain. You see, history is on gold's side. Over centuries, it's been a store of value. I mean, just think about it. Ancient civilizations treasured gold, and here we are in the 21st century, still going gaga over it. Now, the price of gold might fluctuate in the short term like everything else, but when we're talking about the long haul, it's as solid as that high school crush that never gave you the time of day. So let's tackle inflation. You know, that sneaky thief that erodes the value of your hard-earned cash without you realizing it. It's like that 1X that just will never go away. But guess what? Gold laughs at the face of inflation. As prices rise, so does gold's value. Now, according to Peter C. Earle, who's an economist at the American Institute for Economic Research, gold has been a bulwark against monetary debasement. Picture this, right? While your paper money is burning faster than your patience in a traffic jam, gold is chilling, maintaining its worth and sipping a pina colada. And of course, we have to move to diversification. It is the golden rule of investing. Now, stocks can make you feel like you are on top of the world one day and then crash into despair the next. Gold at the same time moves to its own beat. When stocks zig, gold often zags, helping to hedge against market whims and, of course, offsetting losses from all of your other investments like stocks. It's really like having a reliable friend that always has your back when things are getting rough all the other places. You can really imagine your portfolio as a well-balanced diet. So stocks, they're like your hot wings, your spicy hot wings. Bonds are like the boring salad with no dressing on them. And gold, well, gold is that awesome, delicious dessert that you can't wait to get to. It just makes everything better. Let's talk about tangibility, a fancy word for you can touch it. Now, when I said that, I immediately thought of MC Hammer, even though he says you can't touch this. With gold, you can touch this. Now, unlike digital investments, which obviously can just totally disappear with a cyber attack faster than you can say, oops, gold bars and coins are obviously physical assets. Of course, if you store them securely in a place that you should secure them at, then they are obviously hacker-proof. Plus, there's just something immensely satisfying about holding a nice big chunk of gold. It's just like holding a piece of financial security. Picture this, right? You're in a post-apocalyptic world, you know, like in those movies or The Walking Dead. And while everyone else is trading using worthless paper money, you whip out a shiny gold coin. Now who's the king of the wasteland? Let's also not forget gold's performances during a crisis. Whether it's a financial meltdown or political unrest or a global pandemic, COVID-19, gold just stays resilient. It's like the Rocky Balboa of investments. Takes some hits here and there, but always stays on its feet. During the COVID-19 pandemic, while many assets were on a downfall, gold prices soared. Again, it's just like that dependable friend that always knows how to handle a crisis. Calm, collected, and valuable as ever. And again, we talked about diversification, but it's important enough to bring to you in another light. When you diversify your portfolio, you are spreading your risks. Obviously, stocks can be volatile, and bonds, while safer, are about as boring as watching paint dry. Gold, however, adds a unique twist to the mix. It often moves independently of other assets, and this provides a buffer when the markets get a little too wild. So we imagined our portfolio as a diet. Let's now imagine it as a rock band. Stocks are the lead guitar. They're flashy, but they're unpredictable. Bonds are the rhythm section, steady but kind of boring. Gold is the bass player. Cool, collected, and essential for keeping the beat steady when everything else goes haywire. So, what's the bottom line here? Adding gold, coins, and bars to your portfolio is like adding a whole nother layer of financial armor. And this all goes for whether you're a seasoned investor or a complete beginner. Gold just offers security, stability, and the diversification. It helps you preserve your wealth and shield against forces that we can't control, like inflation. But of course, just like any other asset, there's always risk involved, and that comes with gold as well. Thanks for tuning in. Don't forget to like, comment, subscribe. Catch you soon.